Alrighty, well, let's get into it. So we're going to start with EURUSD here. We're going to talk about what we had cooking today. So I'm going to start on the daily chart. So the very first thing that I established on EURUSD this morning was the, like when I'm forming the bias, right? Now, when I say the bias, what I'm really doing, because that could change. What I mean by that, I have this original thesis that I'm coming into the day with. Like I had that direction I'm looking for, but the thing is, once the liquidity is taken, which I'll go into here in a second, once the liquidity is taken, then you got to be willing to adapt the price. Like you can't stay too stringent. I think that's a word. Too stringent on your analysis whenever you have something like this. Like for example, EURUSD. We had this strong close on Monday. Okay. So what I was talking about with my mentees this morning, like right away, I see this and I was bearish. I was bearish on this thing right here because we're still on that downswing. That's a lot of conviction. That's this really weak. You can see right there, really weak close. A lot of body on that candle, just conviction, right? And then I look at this thing, and I see we have this inefficiency down below. We have this imbalance down below. That's that magnet. That's that draw for price. But also, when we're in this downswing like this and it has this momentum like this, price is so objective is to continuously run out previous day's lows. That's that draw. That's that draw that has that's its objective, guys. Okay. So I see this and I established that bias right off the jump, bearish. But here's what I mean when I say you got to be willing to adapt. So pay very close attention. This is what I mean. It took it out early on. Like I understand, okay, it's going to take that. So like if it was to, for example, right here, and it ended up pushing up and it ended up just going ballistic and then provided a short later, that's nice because I still got that draw intact. But you see how it took care of this level very early on? That liquidity's done with. That's Asian session lows. That's previous day's lows. That liquidity got taken care of right here. Very early on, it got taken care of. That's very important that you understand this because I have that thesis, I have that bias come to the day, but you got to be willing to adapt because after that is taken, that liquidity is taken. I mean, guys, like this thing's already it's in a deep discount. That's a huge level. And then we end up getting a shift, which is going to bring me into the setup on this today. Okay, so I'm going to get to that here in a second, but it kind of brings it full picture, right? Just to give you a full understanding of my thought process on this thing. So we take out that low, that liquidity's done with. All right, and then this price has this this big leg up right here, as you can see. What do we call that? Well, that has all the signatures for a shift in market structure. What is the signatures for a high probability shift in market structure? Significant liquidity is taken, fair value gap confirmation, strong close above the short-term high. So you can see this, it came down, it took care of that higher time frame sell side. It's got that higher time frame imbalance as well. We took out previous day's lows already, Asian session lows, and then we get this push up in London session. It gets that fair value gap confirmation, it gets that strong close. You see that? That is a change in trend. Now, here's another thing I want to bring your attention to. Remember that this is a shift in market structure. But when you're looking at a daily expansion candle, or when you're looking at a bullish expansion, your typical bullish expansion day, let's actually zoom out to that daily chart real quick. Now, sometimes it's going to vary based on like if you have like high impact news at like a New York session, of course. But in your typical bullish expansion day, what is this? Like, let's take this bullish candle right here that you see. Look at my cursor real quick, because this is all going to come together because I really want to go into detail here and give you like my full, like what goes through my head in the day, during the day when I'm breaking this stuff down, when I'm looking at this stuff. The wicks do the damage and the body tells the true story. Let me say that again. The wicks do the damage and the body tells the true story, the real story. The manipulation is found in these wicks. These wicks is that you see that it's pure manipulation. Like for example, you see where my cursor's sitting. And you see how price opened up right here on this particular day and it came down. What did it do? It took out previous day's lows. That was when the low was put in. Why was the low put in there? I want you to ask yourself that question. Why was the low put in right there? Because it had sufficient liquidity. Bingo. Had sufficient liquidity. It took it out right here and it did it at a key time, right? So on the typical bullish expansion of the day, the low is going to be put in a London session. Now, of course, if you have like high impact news in New York, then sometimes it'll save the manipulation run, aka your Judas swing for New York session, and those like in those special days. Not always, but sometimes that's the case. But in your typical bullish expansion day, you're going to see that low put in London session. That's, guess what? That's where your Judas swing happens. Now pay very close attention. That's a very important detail here. And it's very important when it comes to like forming the bias as well. So we had the manipulation swing. We understand, okay, the wicks do the damage. That's where the manipulation is. Boom, London session. And we identify our liquidity. Boom. It takes that out in London. Then where's it going to go now? It already has sufficient liquidity. It's doing it at a key time where manipulation, we understand, happens. And now it wants to expand higher. This brings us to where we are today, because it all comes together. We opened up right here. Look at my cursor. We opened up, and what did we immediately do this morning, guys, on EURUSD? Again, I have that direction. Remember, I had that strong close yesterday. I understand, okay, it wants to tag previous day's lows here. It wants to come down to that daily imbalance, and it does so. But it does so very early on. You see what I'm getting at? It does so very early on, and it does that in London session. The wicks do the damage, remember. The wicks do the damage. The body tells the true story. Now, I understand this candle isn't closed yet and anything can happen, but this is my thought process. So it comes down here, it takes care of Asian session lows, previous day's lows, same level, and then it comes down into this imbalance right here in London session very early on. After it does that, I have a huge liquidity pool that is taken out here into London session. It already has a lot of liquidity, and then immediately, guys, immediately after we do that, boom, nice big push up off that liquidity. London sets the trend, and then New York gives you that continuation opportunity. Not always, but if in a case like this where you have a very clear drop above, which we did, and it was in a discount as well on the higher time frame, like it provides, in a case like that, New York can provide for a very nice retracement continuation opportunity. Okay, considering you have all that stuff checked off the list. So we have this shift right here. It comes up, it runs these highs, strong close above these highs, fair value gap confirmation, significant liquidity taken, discount higher time frame, equal highs up above. I got to shift the market structure on the 1 hour chart. That gives me a game plan to work with for New York session. So what's the deal? Well, I want to pull back into a discount for my execution. Okay. If I'm executing on the 1 hour, the 15 minute, I need premium or discount marketplace. There's no negotiation. There's no like it. That's the rules. Okay. 5 minute, it's a little bit different, but that's what I do on the 1 hour. So you can see we don't pull back into a discount right there. Boom. That's what it comes down to, a cheap marketplace. And that's where I got in. I got long into New York session in a discount marketplace on this thing for all the reasons that I just told you. Okay. Now, I didn't take a full L on this. I took a paper cut L on it because I had, well, there's Powell speaking right after 1 o'clock today. So I'm not holding through that. I'm not a degenerate. I'm not messing with that. So I'll bail before that, a little bit before that. But even at this very moment, guys, like this, here's what you got to understand. Like this structure, even though I took a paper cut loss on it, it was a solid setup overall. Like it looked really nice. It's a nice looking setup. But the thing you got to understand, like this isn't invalidation of structure. Like this is not an invalidation of structure right here. This is a simple stop run right now, at least. Look how wiki it is. Look how it respected it. Like this thing, it's still bullish. It's bullish right now. And very, very soon it's going to run up. It's going to run these highs. You got those equal highs up above still. You got the third candle draw right here. You have all these things in here. You have all these things in here that are indications that this does indeed want to move higher still, and it's still respecting that low. So it ran it. It's an invalidation of timing, which is going to happen regardless sometimes. With invalidation of structure, heck no, it's not. It's still bullish. It's a stop run. But yeah, I just kind of wanted to unpack that in detail. I thought I'd make a really good lesson, all that other stuff as well. But yeah, guys, so I took a paper cut loss on it, but it was a clean setup. Looked good and everything. That was the case. Now, GBPUSD, what's the deal on this one? So you can see this actually, it took care of previous day's lows early on as well into London, and then it ramped up off that low right there. Excuse me. So now this thing ramps up, but it ramps up and it does what? Now this one isn't quite as explosive, and this is where it differed a bit. You know, somebody may look at, because I actually had a short play on GBPUSD, but I didn't have a short play on EURUSD, and somebody may be wondering, but Mike, I saw this have that 5 minute shift. Why didn't you like that? Because I had a 1 hour shift and I have this imbalance right here. I don't like that. Okay, I don't like, because I understand this thing overall wants to move higher. It's come down to a discount. I'm not trying to mess with that. And I got this imbalance like literally right here that is coming down into. I don't like that for a short, of course. But GBPUSD is where it differs a little bit because there wasn't as much conviction. I didn't have that imbalance up here for it to get caught up on either. Like there's no 1 hour imbalance in here. There's not a lot of conviction there on GBPUSD. We got the candle close. Like it had like the same type of deal from the higher time frame perspective. It took out previous day's lows, Asian session lows. It had that push up in London, but there was not a lot of conviction there really. I mean, it got the candle closed, but there's no imbalance or nothing in there. And then it just got clobbered. As you can see, as a result, and now it's in the same bucket again. Like that's a stopper and scenario or stopper and signature, but you see, like it don't have that imbalance. So the thing is, I like this for a short because of that. Now, with that being said, I'm not trying to shoot for like I got a short up here and a premium. I'm not trying to shoot for this low down here. Yeah, I see it took it, but I'm not trying to shoot for that because I understand that it could absolutely be the bottom for all the reasons that I just said. Like it took out previous day's lows, it took out hard, it's in a discount, like it has all these signatures. I understand that that's a little bit aggressive for a PT for my liking, all the way down here. So what am I going to do? Well, I'm going to look within this range. You see this range that we're working with right here? And it's 15-minute bullish market structure at the time. It's pushing up. It's consistently putting in higher lows, higher lows, higher lows. It's consistently pushing up here. You look at this range and you measure this price range right here. Take your Fibonacci from that low to that high. Okay? And look, anything like these key liquidity pulls into discount are valid. You could shoot for this sell right here. You could shoot for this inefficiency down here. I decided to play it even safer. Again, kind of considering that we have that 1 o'clock news coming up. I want to take as low hanging objective as I can get here. I shot for this 15-minute sell side. I started off with that with my eyes set on this imbalance right here, but I switched it up fairly quickly. I said, all right, no, I'm gonna shoot for this just to play it safe. So I shot for this 15-minute sell side right here, which is actually right above. It's actually still in a premium within that range, as you can see. So I played it really safe, and that's, look at my cursor right there. Level of support. Let's go to the 5-minute shift, because again, like what frame this is, because it's in a premium when it's pushing up like this. Okay, I understand like this could be the low that's put in when this is happening. I see that 15-minute in there. I see it's taking a significant sell side, so I'm not trying to shoot for that, as already made clear. But it's in a premium on this, when it's pushing up like this, it's in a premium, and it's taking care of Asian session highs, because Asian session highs, or Asian session begins right here. And then, of course, you can see the high was put in right there. It's when it took that out. All right. So it took out Asian session highs. Like significant buy side was taken still. It's making a new high. It's making a new New York high into New York session. It's pushing up. And then look right here. See that fair value gap right there? Boom. And then right here, you see this? What's that? Oh, that's a strong close when you have a short-term low. Shift to market structure. That's a 5-minute shift to market structure. Fair value gap. Strong close. Pushes up. Premium. Found resistance. Seeks 15-minute sell side below. Lock in gains, just like that. So a really clean setup, really good follow through all around on that thing. And yeah, as I was saying, like I'm still leaning bullish on it. I'd say it's going to have a nice reversal here to take out these highs here next. I'd say that's what's the same deal with EURUSD. I'd say it's going to ramp up and clean it out. So, and it's just a classic stopper and signature that's happening right now. But yeah, guys, that's GBPUSD. Now into the USD. What's the deal on this one? Well, it didn't really do too much in London session. It did just back and forth, as you can see. But it was like a very similar deal in regards to the daily chart, the higher time frame chart. My bias. Now, again, don't get lost, because when I look at this chart, like my bias is bearish. But it's bearish, as I was saying, you got to be willing to adapt. You got to be willing to adapt, because once it takes the liquidity, well, it's a different story at that point. What do I mean by that? So I know my chart's kind of messy because these imbalances that I got on there, but just look where my cursor's moving. You see this big bearish candle right here? That's a daily candle. That's Monday, yesterday. That closed very weak. That closed very bearish. A lot of candle on that. A lot of strength. That's a bearish signature displaced beneath these lows. Each candle tells you a story. Each candle holds information that wants lower prices. I can establish that quick, very quick, because there's nothing holding this thing up right now. Like it displaced lower, didn't respect that low. It's coming down here. Yeah, it's in that imbalance, but it's like it's gonna do what next? Since it didn't respect this, it's gonna have that low right there. It's gonna be a magnet. No respect whatsoever. Like no type of rebound whatsoever. And we have previous day's lows. That's gonna be a very powerful magnet. But and here's the key thing, which I'm really trying to drive through your dome. Once we take that liquidity, it's a different story, and you got to be on high alert because now it's gone. But right now we're in that downswing. It's very bearish, and it's going to target that low. We understand that. So what happens here? We go into London session. It kind of goes into consolidation. It's back and forth, back and forth, back and forth, and then right here, boom, come down into New York session. and we take it. We take that low right there. What's that? That's previous day's lows. That level I was just talking about. Agent session, it takes care of it right here. And a key thing, it also has agent session highs up above still. It's still in there, still intact. We have relative equal highs up above. We have this internal liquidity up above, and then boom, it has a nice big push up right here, nice big shift right here. And then it pulls back into a discount for us. And my target, of course, I'm looking forward to seek these relative equal highs up above. That's what I'm targeting right here, because that's the next major level of resistance. It didn't do anything prior to the news. It just kind of back and forth, back and forth. Same deal as I was just talking about with EURUSD. I had to bail before the news, and I bailed out with a small gain on it. And then we had the news came down. Now, that's outside my kill zone. But remember, a lot of times, not all the times, but a lot of times, the first run you see from news is a fake run. You see this thing, the first thing it does here, it moves lower to clean out these lows, and look how it respected it. Is that really an invalidation of that structure? It's not. It's not. It's not an invalidation of that structure. It's a stop run. It comes down, it's more invalidation, because news is a key time for, this is that time element. This is where we combine the time element. News is a key time where you can expect manipulation runs. Okay? And we see it do it right here. We see it do that. It runs out that low. But it respects it because it's super wiki. It's respecting it, and it immediately pushes back up. Because like nothing really changed. It's just, that's what news, that's just a key time. That's something that happens from news. That's just something that news wants to run stops. That's exactly what happened there, which we understand. That's something, that's a common scenario, which is also why we do not hold through news, right? And of course, it's very unpredictable. You don't know what news is going to be released. You know, as people try to say, Mike, the chart will tell me everything I need to know. I'm going to go in, just play well. Yeah, good luck. You'll come back to me in 5 years with that and see if we still have that same story. All right, it ain't going to happen, right? You're going to get burned. So we don't mess with news. All right, and yeah, it's just, you know, news, you don't know what's going to be released, and also, you know, it's just a key time for stop run. So you can be correct, but then you can get taken out with a stop run and see price go in your original direction, right? So you get the gist. That was the case on it. That was the thought process behind that today. Really clean setup, just news just kind of messed with it. All right, so now we're going to be talking about USDCHF, and you might be looking at this chart and thinking, oh, what the fuck am I looking at, right? What is this mess? What is this classic DSC environment that we are being exposed to right now? Well, it is an ugly chart right now. Like, I mean, it's awful, but this was on a 15-minute execution this morning, which is when it was a lot cleaner earlier this morning than it is now. But what we had on USDCHF is like the bias was bearish on this too, right? You know, and somebody might be like, but Mike, you just like, doesn't that kind of contradict, because you said the bias was bearish on EURUSD and GBPUSD coming today, but you're saying the same thing on USDCHF, but wouldn't that kind of be the opposite? My advice, play the chart that's in front of you, okay? Because what's the chart that's in front of me on USDCHF? Well, look what happened yesterday. Monday. We opened up right here on Monday, yesterday, and we came up and we did what? We took out these highs. Remember what I was just telling you? The wicks do the damage, the body tells the story. What's that right there? That wick is manipulation. It runs these highs, it looks bullish, and then boom, it just slams lower. It slams lower. It has a strong close. The body tells the real story. Strong close. So if it didn't respect that, we already have sufficient liquidity right there. It has a strong close. What's going to be the next key liquidity pull? What's the next key liquidity pull? After you have such a strong close like that, what's going to be your next key liquidity pull that price is going to want to seek? Opposing sell side. Where's that at? Previous day's lows. Right there. Previous day's lows is the next level. With such conviction, that momentum is set. It's going to want to reach for that. That's that magnet for price. Okay? So here's the key thing here, guys. We have that right there. And then it retraces higher. And this is Asian session. What does it do in Asian session? Well, if you look at this thing and you really study this thing, what this does is it comes up into a premium marketplace within this 4-hour range. If you were to take your Fibonacci from this high to this low, it came up above 50% equilibrium within that range. That's an expensive marketplace, but it did it in Asian session. That's not the time for that to happen. So I don't trust that that is going to hold up an Asian session, of course. Okay, this is that time element. This is this time element. London is a key time for manipulation, not Asian session. Asian session is where we want to see that liquidity built up. Okay? So we see this thing, it comes up into an expensive marketplace within that 4-hour price range, a premium marketplace, but I want to see it run into London, of course. I want to see it take that liquidity. It goes back to one of my most common sayings: wait for liquidity or you'll beat the liquidity. Okay, this is how we wait for the liquidity. We identify it first, which is that Asian session high, and it comes up and it takes it right here. So we're not fooled by this thing moving lower right here. That's just, it's bait. And then boom, it ramps up and it takes this high. Premium marketplace sweeps that liquidity. Asian session highs, done with. It can no longer serve as a draw. But look down below. Look down below. What do we still got intact? We got, remember that level we were just talking about? You remember the daily chart what we were just talking about? Previous day's lows, that next draw, because it had that strong expansion, the strong close, it's still there. It's still there. And you're in a brand new day. You've already taken out Asian session highs. Price is going to move in the direction of least resistance. It's already taken out that liquidity. It's done with. It's gone. So that can no longer serve as a draw. And then after taking that, you get that elephant. It jumps in the pool. And, you know, I think some of you know what I mean when I say the elephant jumps in the pool, right? Some people get it, some people don't. The elephant, it jumps in the pool right there, and it leaves that splash. It has that strong close. It has that fair value gap. Look down. Still there. Shift. And also you have Asian session lows intact too, which is another thing. So you have this clean draw down below. You have this draw at this point. That's your draw now. You got this shift now. That liquidity's done with. So guess what? Once you come up into you take care of this internal range liquidity, you're going to seek this. You're going to seek this external. Seeks internal, which it does, and that gives us an opportunity to get in because I got in when a premium marketplace. If I'm executing on the 15-minute or the 1 hour, I need a premium. 5-minute, not so much. Sometimes I will because, well, it just depends on what my target is. Not every place is the same, but with the 15 and the 1 hour, it's always the same in regards to I need a premium or discount. So it comes up right there. Look, premium, right there at 30. And so it ramps up. It gives a little bit of a deeper retracement as well. It gives optimal trade entry too. And then it finds resistance, it rolls over, and it attacks the low. Now somebody's going to be wondering, so you broke your rules, Mike. So because you always say, Mike, that you don't hold past 8. I caught you. I caught you breaking your rules, you fucking degenerate. Not quite. So with the 5-minute, that's true. With the 5-minute, I don't hold into 8 o'clock, but with the 15-minute, the 1 hour, good to go. That's a different set of rules. Okay, the 15-minute, the 1 hour, good. 5-minute, I don't hold past 8 if it's a London trade. Okay, so just want to make that clear because I know there's somebody out there that's wondering about that. That's the rules. So we have that draw. It takes care of it right here. Done with. Right there. Now, that wasn't my PT. That was a draw. I took the low-hanging objective. So I got out once it like cleaned out this low right here. That's the low of the impulse move. See that? Where my cursor is. And yeah, guys, that's what we had. So just a really clean setup all around. So I think that about wraps it up though. Also, if you want to join my free Discord chat where I post all these plays real time, no hindsight, and also have tons of free educational material, there'll be a link to that in the video description. If you enjoyed the video, leave a like, subscribe to the channel, and I'll catch you later.